Guys, I'm buying Google stock, and I'm going to share with you why I'm finally buying it. Now, guys, Google's an 83.45 was the low. It's just a reminder that no matter how great the company is, people are very fickle with their emotions, and that's what drives stock prices in the short run. You have to remember that. So what about Google? Well, Google's an incredible company. The two top search engines in the world are Google.com and YouTube.com. How much time do you spend on YouTube every week? In fact, we were recently at a conference in which they showed that YouTube is actually watched more than Netflix on a daily basis at people's homes. That is incredible. Every single day, over 1 billion hours of YouTube videos are watched. There are about 100,000 Google searches done every single second. That's equivalent to about 8.5 billion Google searches per day. And remember, China doesn't even allow Google search. So they haven't even tapped into that market. The goal is that over time, as China starts to become less and less communist, they're going to allow more and more Google, other websites in there. Now, obviously, China has its own great search engines, but Google dominates the search engines in this entire world. They dominate video search. They dominate video consumption. So guys, as I said, I am buying Google, but you got to remember, I'm not just flat out buying it. The stock has fallen immensely. It's fallen from an all-time high of 193 on July 10th, which is also the high of the NASDAQ 100, the QQQ. It is now down to 150 or so. I like to buy companies straight out, but I also like to sell puts to buy the companies at lower prices. Now, before we get into Stock Analyzer a little bit later, what I'm trying to do here is I'm using my ability to have cash to say, listen, I'm going to give somebody the option to buy the stock at a lower price. It's at 150 today. Let's say I want it at 145, whatever the random price is. We'll get to that later. Somebody will pay me $2 for the right to buy Google for 145 X number of weeks from now. Great. I'm being paid to wait. But the key to this is if the stock falls to 120 in that time, I still pay 145, but I still keep my $2. If you're using this strategy, you can't have FOMO that you could have bought it at a cheaper price. You have to be ready to buy at the price that you sell the put at. And I'll get into that on the Stock Analyzer tool later. Look at this. They have a $1.9 trillion market cap and basically the same enterprise value. That means essentially no debt in the company. Zero debt. Now, it's not exactly that, but you take their cash, offset their debt, boom. They have a growing return on invested capital, which means they're growing that moat every single day, every single year, and they're getting a good return on the money that's invested in their business. $60 billion in free cash flow last year. I will say, one thing I don't like, in the short run, $88 billion in net income versus $61 billion in free cash flow. I'm not a huge fan of that, but in the last 5 years, $57.5 billion in free cash flow versus $63 billion in net income. So kind of helps offset that with the 5-year average. 31 times price to free cash flow, 33 times the last 5 years. Guys, great balance sheet, great growth. Let's look at their 8 pillars here. What's the story here? Well, the story is that Google kicks ass. High ROIC, buying back shares, which is a check mark, even though the stock may have been expensive as of late. Hopefully they're buying back shares when it was sub 100. Cash flow growth in the last 5 years of 30 billion. Net income growth in the last 5 years of 56 billion. Revenue growth, $160 billion growth. Guys, I don't know what to tell you besides what is the bear story for Google? I really want to understand this. Where do people look at Google and say, yeah, this company sucks, and here's why? Competition? Guys, name me another search engine. I mean, it's unbelievable. What percentage of people have a Gmail account? I'm like one of the only people that has a Yahoo account still. I've had it since like 1998 or something, and I still use it. And if you have Hotmail, where do you live? That's all I got to ask you. Everybody's got Gmail. It's an incredible story. Now, it didn't take much for us to find the stock. Peter Lynch has a great theory of look at the things you love and use and go invest in those companies if the companies make sense financially. That's the big key here. So whenever I look at companies, like, oh, I use this product, wonder what the company is, wonder who has it. Well, we've been using Google. I still remember the first time I used Google. I was at the University of Michigan, and I was what's called the Fishbowl. The Fishbowl is the computer lab in a main hall, and it's a fishbowl because it's got windows all around it, so it looks like a fishbowl, right? I remember they're doing something with a guy I worked with. And he said, I said something about, I went to Yahoo. And he's like, oh, you don't use Google? I'm like, what's Google? He goes, oh, it's a great search engine. I went to the website and it was just google.com. I'm like, there's nothing here. He's like, exactly. They just keep it really simple. Never stopped using it from there. That's the incredible part. That's how easy it was to use the site. And at first I thought it was too simple, and that's what Google did great. Let's see what the analysts are looking at for Google, because a lot of growth potential, guys. Almost doubling their earnings per share according to analysts, $7.89 to $14.41. What part of the story is telling me anything other than pay a premium for Google? I highly encourage you to tell me what the reason is. Remember, value investing isn't just about buying slow, boring companies. You can value invest because all you're trying to do is pay less than something's worth. That's the whole idea behind value investing. And as a company grows its revenue and profit faster, it's worth more today than another company that's not growing its revenue and profit. Look at revenue growth. Yeah, nothing sexy, but it's still double digits, $358 billion to $521 billion. This is a great company that even when they slow with a great balance sheet, they're going to hopefully take that cash flow. And if the stock is so cheap, buy back shares. Google has another revenue part called Other Bets. These are those small bets they make to try to grow something much bigger. This is basically outside of their Google and YouTube business. Revenue had grown almost 50% from $1.06 billion in 2022 to $1.52 billion in 2023. Now, is that material to the business? Not right now, it's not. But you have a company that encourages people to go make their own bets. Go out there and try to do things that are new, because they don't know what the next YouTube will be. They paid $1.65 billion for YouTube, I believe, in 2007. And now the revenue for YouTube, just in the first quarter of 2024, was a little over $8 billion. That's incredible. Now, guys, there's a lot of things to discuss about Google, but not everything is absolutely pertinent and necessary in order to make an investment decision. I'm very big on this channel on keeping things as simple as possible. This is something the mantra I have in our community, on our videos all the time. So if you're interested in having these deeper conversations, that's why you need to get in the community. If you're interested in analyzing the company like we're going to in a stock analyzer tool, that's why it's imperative that you check them out. Now, if you have checked it out, you probably have noticed that we have a limited number of daily spots for our community and software. And the reason for that is the software as it exists today currently includes everything, all of these tools that we're offering for stocks, retirement, and real estate. But now we have 4 YouTube channels, and we're probably going to add a few more. So behind the scenes, we are making some big changes as these expansions occur. And the current offer of everything is going to go away. Now, you may remember, if you've been watching us since we started, I built the software for myself. But as we made videos, people would say, hey, how do I get that software? How do I get that software? And at the time, I'd say, you can't. It's an expensive data feed. And then obviously, we got enough requests where I said, listen, we just didn't make this into software. I use this software every single day. Upstairs, before I made this video, I was looking at real estate deals. Guess what? It was my real estate calculator. This is not something that we just make to sit there and say, let's sell some. No, it's out there to make my life easier and better. But our channel is growing, and our community is growing like crazy. So it has to become less about me and more about how I can better serve you and the community members. The good news is these changes haven't been made yet. So if you join today, you'll be grandfathered in for life with all the data and all of these tools. You'll get all of it, and you're going to stay in your pricing tier forever. This is the best deal we've offered. So if you're really serious about making better financial decisions, potentially increasing your returns, and sleeping better at night, which is absolutely the most important, click on the link in the description below to get access to everything we have to offer before you make the changes. And I'm very confident you're going to write me an email and say, this is a great software and tool, like I currently get on Twitter when people say that. So as I said earlier, I'm selling puts at a lower price for Google. Here's my I'm just going to focus on my mid assumptions here for the next 10 years. I did 7.5% revenue growth. I did profit margin of 24%, the same for free cash flow, because they are pretty reasonably close to each other. And I think over time they'll equate out. I did a PE of 23 because, guys, as we said over and over again, Google is a premium company. They deserve a premium multiple. This is not some 15 multiple company that the market averages into. This is a company that has very low debt, has staying power and a huge moat, and has the ability to grow their revenue and profit at a higher clip. More importantly, their profit and free cash flow at a higher clip than the rest of the market. If you're not paying a premium for this, I have one question for you. What are you doing? You have to pay a premium. And I want you to remember, value investing isn't about paying a cheap multiple. It's about paying a cheap multiple for the company and a cheap price for the company. I think 23 is a very reasonable multiple for the kind of growth that this company has. Now, the only bear case I can think of before I hit the analyze button is the antitrust from the DOJ. Guys, not going to lie, it's better to not have that than to have that. But a lot of companies have experienced that in the past. In the end of the day, I think a lot of it has to do with political, manipulation, saying this is a big company, it's very powerful, they own search, etc. I don't know where it's going to play out, but several Microsoft had antitrust back in the late 90s and early 2000s. My guess is Google and YouTube will work with the government and come to a solution that probably will not impact the business as much as people want to believe in the long run. Now, you might be saying, Paul, you're dismissing this. Yeah, maybe I am. I could very well be. But every single person at the DOJ who's getting mad at Google, guess what they do during the day? They Google results. They probably Googled, how do I sue Google? That's probably what they Googled in order to determine how they go file this suit against Google. And at night, they probably watched a video from somebody saying, if you want to file an antitrust against Google, how do I do it? They probably watched a video on YouTube to explain that to them. The irony of it all. Okay? Now, the final number, 9% desired return. Now, guys, before I hit the analyze button, stick with me because I'm going to do the 3 low, middle, and high assumptions right after this. So I hit the analyze button. Remember, 9% is not enough for Google. That's the market return, 9 or 10%. But it's just a place of saying, what's the intrinsic value for Google? Hit the analyze button. Guys, 180. This is green, baby. Based on today's price, 11.26% return. Not bad. Now, let's pull the 3 assumptions up. Wider range, 4, 7.5, and 11. And guys, 22 to 26, multiples of 20 to 26, 9% return. I just basically take my middle, where I think it's probably going to end up, and go, okay, what if there's a little bit worse that happens? What if it's a little bit better? And go down the line. Hit the analyze button. Boom. 113 in the low, 280 in the high, 180 in the middle. So you might be wondering, well, Paul, so what price are you buying it at? I sold a put for 140 for October 4th. That paid me $1.45. My annualized return was 15.2% on my cash. I'm making 15.2% on that cash, waiting to buy Google at a lower price. The risk is it goes lower than that. I could have bought it cheaper. And also the risk is it skyrockets from here. I never get the stock. That's how you use puts to buy companies to get good returns on the cash you have. Thank you for your time.